You pulled up to a drive-thru this week. You ordered. A voice answered, calm, fast, no hold music, no please wait. It got your order right. That wasn't a person, it might have been SoundHound. The company has been building voice AI since 2005, long before ChatGPT, long before anyone called it AI. Today, their technology is inside car dashboards, restaurant drive-thrus, bank phone systems, and hotel lobbies. 7 of the top 10 global financial institutions are customers: Panda Express, Jersey Mike's, IHOP, Jeep, a major Japanese automaker committed to double-digit millions of units. You've already talked to this AI. You just didn't know it. Welcome back to Ticker Talk. I hope you're finding the series helpful. One stock, 5 minutes, no jargon. Let's go. What they do. SoundHound builds voice AI for businesses, not for consumers. Their technology sits inside the products and services that companies offer their customers. 3 core markets: automotive, voice assistants built into car dashboards; music, navigation, calls, ordering food, paying for parking, all by voice; restaurants, AI that takes your drive-thru order, handles queries and routes calls; enterprise, AI agents for banks, insurers, hotels, and retailers that handle customer service calls without a human on the line. The platform is called Agentic Plus, moving beyond simple voice commands into full AI agents that complete complex multi-step workflows. A customer calls their bank. The AI verifies their identity, checks their balance, processes a transfer, and closes the call. No hold time, no human. SoundHound gets paid per interaction. The competitive edge is the Polaris Foundation model, proprietary, not built on OpenAI, which reduced client error rates by 3 times when customers migrated to it. Being LLM agnostic means SoundHound can plug into any underlying model and isn't dependent on any single AI provider. The numbers: FY 2025 revenue, $169 million, up 99% year-on-year. Q4 alone was $55 million, up 59%. Record enterprise deals closed in the quarter. Subscription backlog, $1.2 billion. Contracted future revenue already signed. Cash, $248 million. No debt. 2026 guidance, $225 to $260 million. Current price, approximately $6.82. 52-week high, $22.17. Down 69%. Analyst consensus target, $14. Over 100% upside. The bull case. Voice AI is not a feature. It's an interface layer. Every business that interacts with customers by phone, in a car, or at a counter eventually needs it. SoundHound is not trying to win the consumer AI race against Apple and Google. It's building the B2B infrastructure that sits underneath. And that market is enormous and largely uncrowded. The $1.2 billion backlog is the most important number in this story. Revenue from those contracts hasn't been recognized yet. As it flows through over the coming years, the growth story has a structural foundation that most AI companies don't have. You can see where the revenue is coming from. Voice commerce is the next catalyst. OEMs launching in 2026 will allow drivers to order food, pay for parking, and make reservations directly from the car. 4 OEMs going into production this year. That's a new revenue stream that barely existed in 2025. And Nvidia expanded their joint offering with SoundHound on the Drive AGX platform in 2026. The same week the CFO left. The technical validator is still there, even if one executive isn't. The bear case. The CFO just left. Nitesh Sharan departed April 2026, the architect of an 8-fold revenue increase in 4 years. Co-founder James Hom is interim CFO while a search runs. Worse, 6 C-suite executives, including the CEO, sold a combined $4.46 million of stock in December 2025 at $11.27 per share, possibly pre-planned sales. But the optics of broad insider selling at prices well above today's level are hard to ignore. Losses persist. Net loss of $14 million in fiscal year 2025, despite near doubling revenue. At roughly 11 times 2026 revenue guidance, the valuation demands flawless execution. Any miss will hurt badly. Here's where I land. The product is real, the backlog is real, the customers are real. This isn't a company selling a vision. It's a company with Panda Express, BNP Paribas, and Jeep already paying for the product. The risk is leadership and timing. The CFO departure matters less than the insider selling optics. And the stock being down 69% from its high means the market has already done significant damage. The question is whether that damage was warranted or overdone. Watch two things. First, 2026 revenue landing in the $225 to $260 million guidance range. Any miss will hurt badly at this multiple. Second, a permanent CFO hire. That single appointment will tell you more about the company's trajectory than any quarterly result. Not financial advice. Do your own research. All figures from SoundHound AI public SEC filings. One stock, 5 minutes. No jargon. See you next week.